And you interrupted me earlier as I was going through these balance sheets, and I was astonished at the big four here. I was looking at Tier 1 capital ratios. They're all roughly the same. Ag Bank perhaps a little bit weaker with 11, but the others are, what, 13.5 for ICBC, 12 and 13 for Bank of China and CCB. Dividends roughly the same as well, 4.5%, 5% or thereabouts. It's all about non-performing loans, though, is it not?
Partly, but I think as credit agencies, we also look at the overall leverage in addition to the levels of reported NPLs. Certainly, there are signs that there's stabilization in the asset quality, but we believe much of that is owing to the stimulus efforts that were taken in the second half of last year. Now, whether that stabilization or even improvement in asset quality can be sustained into the second half or into next year, we will still have questions over that.
Great. Tell me something. Does the dividend yield mean anything to you here? Because it can be just a product of a share price and a PE ratio, etc., which is perhaps underperformed, and they kept the divvy the same. Because, again, we're looking at ICBC 4.5%, Bank of China and CCB also 4.5%, but again, it is Ag Bank 5.2%, which can be reflecting perhaps a bit of weakness, and it has underperformed the others when it comes to the share price.
Yeah. Well, we focus more on the overall capitalization level at the banks, especially their core capital. For the large banks, we would say that because their earnings have been supported by better margins in the first half, helped by improvements in the market rates, so there's less pressure on the large state banks, whereas if we were to look at some of these smaller banks, for example, we've already seen some signs of the leverage in the sense that their assets have actually declined for the first time, and we believe that is owing to some of the capitalization pressure that the clampdown on some of the shadow activities have brought on. Those banks have been forced to take on some of the exposures back onto their balance sheet, and that's pressuring their capitalization.